Hello, Chris from Channel X TV, sponsored by Volo here. Delighted to be joined by Scott Peterson, VP of US Tax Policy and Government Relations at Avalara. So, welcome, Scott. And that is one heck of a title. What do you actually do on a day-to-day basis?
Welcome. Thank you. I appreciate this opportunity. On a day-to-day so my day-to-day job is pretty broad. So there's two parts of that title: tax policy, and that's where in my public relations and marketing hat. So I spend a lot of time helping Avalara market itself to the public through interviews with reporters, interviews with anybody that wants to be interviewed, actually, and lots of papers, lots of editing. I've got two papers I have to edit today. The other side of the government relations is where I travel. So this year I traveled to 19 different tax conferences, in the United States. And my job at those conferences is to introduce Avalara and the way we do business to state governments and local governments here in the United States, and hoping that introduction will give them a point of contact, a reason to call us when things don't go well, or a reason to call us when they want to do something different than they do. I mean, I'm trying to get the governments in the United States to be more alike in their administrative practices. Taxability, we don't care what they tax. We don't care. We care how they tax it. We don't care what they tax. But we do care that the process they put in place is something you can automate. And if you can't automate it, no one from Belgium, no one from Brighton has a chance of being compliant with a U.S. or a local tax here in the United States if you can't put it into that computer. That's my job.
Yeah, and appreciate that, because I think automation, not just for tax, but for the whole of e-commerce, is pretty important if anyone's going to have any time to actually get some proper work done. But particularly for tax, because it doesn't make you money. It's something that you're kind of obligated to do. And like you say, you're going to have to pay tax, but it's how easy can you make the administration and collection. But talking of tax, it's been a kind of turbulent few years with, first of all, we had the COVID pandemic. Then we've got several wars around the world in Eastern Europe and in Israel at the moment. And the economy has been pretty bumpy. Interest rates have skyrocketed in recent times. What can people expect for 2024? And are things like interest rates going to impact tax collection at all?
So the Federal Reserve here in the United States, they raised interest rates for all of us for a reason, and that was to deal with inflation. And it seems to be working. Inflation is falling. Are prices higher than they were 2 years ago, 3 years ago? Yep, no question about that. But that takes time. After the interest rates go down, inflation goes down. After the inflation goes down, interest rates then go down. So we expect interest rates to slowly fall throughout 24, maybe 25, depending on just how we as consumers react to lower interest rates. If we go crazy again and we just start borrowing money and spending money again, inflation will go back up and the interest rates won't go down. From a tax perspective, it's in the rest of the world where it's a value-added tax, and here in the States where it's a sales tax, the price of the good impacts the amount of tax that gets collected. So if the prices go up, then the amount of tax goes up. There is a corresponding effect that as prices go up, we spend less, or we're a lot more careful on what we spend. We either spend less or we buy things that cost less. And in both cases, they offset that natural increase in tax collections that come with rising prices. So a rational consumer, one that has the ability to change, will buy less. They will spend less or they'll spend less, and that will, I wouldn't say it offsets the effect of the price increases, but it comes pretty darn close. I mean, a lot of the here in the United States, the tax states are just awash in money. But a lot of that has nothing to do with inflation, and has a lot more to do with all the money the federal government threw into the United States economy in 2020 2020 and 2021 to offset the effect of the recession we had in 2020 and the pandemic. And so that amount of money thrown into the economy over a 18-month, 24-month period, all by itself would have created inflation and would have created more tax collection because there's just more money being spent.
And having tax is good because obviously governments and states and authorities could spend it on services. But the reality for businesses is that they've actually got to collect and remit these sales taxes or value-added taxes, depending which country you're in. And that is complex enough if you're doing it in your home country. But when you're selling to multiple territories around the world, it does become even more complex. So for the UK, if we're selling to the States and we're selling to various European countries, we're coming under all sorts of tax regimes. For a small business, what are the sort of absolute minimums that they have to do, and how can they automate them? And are things like ChatGPT and AI going to be able to help us do our taxes in the future, or what can we do to make it easier, basically?
I like to tell people that if you think collecting tax in the UK or France is complicated, wait till you get to New Mexico in the United States, because that tax that they've got looks nothing like the tax that's in the UK or France. So the first thing I tell people at small businesses, any kind of business, is don't assume that what you know is all you need to know, because everybody's tax is so slightly different. Even if it's just slightly different, that little tiny difference all by itself will create complexity and additional cost. The first thing that a small business needs to know when they're selling is, am I legally required to collect? What is my legal obligation? And for most of us, in most businesses, if you sell into a country, you have an obligation to collect the tax. Now, there may be some thresholds that you fall below, and that's an important thing to do in the United States. In the States, there are sales thresholds that if you're below them, you're not legally required to collect the tax. So that's first and foremost. Am I legally required to collect the tax? What is that thing that I have? Where's that line that I have to cross that puts me into a situation where I have to then understand what it is that jurisdiction's tax structure looks like?
And I think it's worth dropping in there that it's not just a monetary level. There's also things such as a sales nexus, that if you've physically got your stock in a certain territory, that could also, even if you're below the sales threshold, that can make it automatic that you've got to collect taxes. And if you're using things like Amazon FBA or fulfillment by Walmart, your stock could be in all sorts of different places.
Yep. And that has been a very unpleasant surprise for a lot of sellers. They just assumed that because the marketplace, they sell in a marketplace, they have Walmart's warehouses around the country, and that Walmart is then collecting the tax, which they're legally required to do, that business is then off the hook for any other things. And that, unfortunately, the states didn't take that position. They're taking, as you said, they take the position that if you have inventory stored in a place, you have physical presence in that place, which may require you to have a sales tax license, may require you to have a corporate income tax license. And I mean, there's other taxes, and this is something that many had no idea what's going to play out the way it has. They didn't expect to owe corporate income taxes in places other than where they're physically located. So yeah, so you have economic nexus, you have physical presence nexus. It didn't go away when they created economic nexus. And they overlap each other, and sometimes they conflict with each other. And in every case, it requires a business to find a licensed professional to help them understand what the law is, because you don't want to make a mistake.
And I think this all goes back to the Wayfair decision. But what's actually changed since then? And the corporation tax liability, that's a new one for me. What could make me liable for corporation tax in various states?
Well, physical presence is a guarantee. So if you have inventory in a warehouse in a state in the United States, that you then have a presumption that you owe the tax, the corporate income tax. But I mean, there's minimums in that as well. And just because you have property doesn't mean you necessarily have income. I mean, the beauty of an income tax is there has to be some income. The problem with the corporate income tax is that often states have minimums. So California is $800. If you are if you meet the nexus requirement in California for their corporate income tax, the minimum fee is $800. So even if you don't have a penny of income, but you have to go through the mechanics to then determine whether or not you have income, which means you apportion it across the United States. It's not a very simple thing. It's a very hard thing. So once you know that, once you figured out where you are, then you have to figure out what are the requirements to actually become a taxpayer. In most states, you have to have a license. Well, every state, you have to have a license if you're a taxpayer. Even in some states, you have to have a sales tax license, even if you're not going to collect any tax. One of the things that we're working with states on today, as part of the broader business community here in the United States, is to convince states that to eliminate the licensing requirement when the individual is never going to collect the tax. Yes, I make sales into your state. I do it through Amazon. I do it through a marketplace. And yes, I may have property stored in your state, but somebody else is collecting the tax. Why should I have the legal requirement to have a license and file one return a year? That's a zero return. And if I mess it up, you're going to charge me, a $50 penalty for failure to file. And it's just a disaster. That is a disaster on both sides of the position, because states hate it as well. So that's something we're trying to do. We're trying to get people to be less onerous in the way that they are imposing obligations that just really don't make any value. I mean, there's no value to the state, there's no value to the business.
If you can persuade the legislators to do that, there's going to be a lot of relatively happy people.
Now we're working on it.
But let me go back. I asked about AI and ChatGPT and how new technologies may be able to help. How do you forecast them being used in the sort of tax environment? What will they be able to do for me?
I think it's a little early to say what it'll be able to do for a business person. We're using it today to speed up the time that is required to bring someone up to bring them online, in onboarding, what we call it. And so we're trying to figure out how to reduce the amount of time that it takes to do that by using ChatGPT to elicit information from businesses. So let that tool be the person that used to be on the phone. And because there's a dozen questions one has to ask a business person to be able to get them in a position where they're able to start collecting sales tax, and take that information through the chat, and with some honestly not particularly complicated artificial intelligence, take that information and turn that automatically into screens that are filled in our system. So as that chat is asking questions of that business, the information is going automatically into the system and creating all the licensing requirement that we have to get someone licensed around the country. It will probably at some point speed up or not speed up necessarily, but ease the ability for a business to say, okay, where do I have to collect sales tax? And then, chat will come back and give you an answer. But you have to know enough about what the tax structure looks like where you're making sales to ask chat to give you an answer that actually has relevance. You can't just say where I have to collect sales tax, because it's going to say, who the heck knows? I sell brown shoes in 5 states and the UK. Do I have to collect tax? That kind of a question. To get chat to tell you the answer, you have to be very specific in the question you ask.
Yeah, I guess that is the problem. But good to know that you're using it to speed up and probably make the onboarding process to become an Avalara client more easy. And as businesses do grow into new channels and jurisdictions, um, obviously they're going to be looking to handle the complexity as painlessly as possible, and that is going to make automation for tax solutions. Just before we go, tell us a little bit about what Avalara does, who it can help and who it can't help. So, for instance, if I'm a pure marketplace seller selling on Amazon and eBay, and they're collecting my taxes in the States, do I need to sign up for Avalara? Are there things like corporation tax and zero sales tax returns that I'm going to need to do that Avalara can do for me? Or are there some businesses that don't need you, and there's others that absolutely must use a solution like Avalara?
The problem with a sales tax, that the way it plays out here in the United States, is that there are obligations imposed on people even if they don't collect the tax. And like I talked earlier about those states that require a license and a single return a year. Do you need to have somebody like Avalara help you with that? No, you probably don't. But somebody in your organization needs to remember, oh, that's right, I've got a sales tax license in Minnesota, and on January I got to file that zero sales tax return. And what we provide is that reminder. We just do that for you automatically, so it never, there's never an issue of you being missing the deadline. One of the very frustrating things about a sales tax is that the presumption is that everything's taxable unless you, the retailer, can prove it's exempt. And the proof of exemption is a document. And here it's called an exemption certificate. And so lots and lots of manufacturers, wholesalers, and retailers wholesalers and manufacturers, distributors who sell nothing at retail have to have a system in place to document why they didn't collect sales tax, because they're selling something that's taxable somewhere. They're just selling it to somebody who's going to use it for sale for resale. So in Hawaii has their marketplace seller law is very clear that if you're a marketplace seller and you're going to sell on a marketplace, that is a sale for resale. By law in Hawaii, that's a sale for resale. Well, you have to be able to document that the thing that you've sold to Amazon or Walmart that they're selling in Honolulu is a sale for resale. To do that, you have to have a piece of paper, and you have to exchange that document between the buyer and the seller. If you don't have it and you're otherwise making sales into Hawaii, the state's going to say, you prove to me why the sales that you made over here on your own website, you collected tax on, but the sales you made over here, you did collect tax on. Tell me, explain that to me. That's when you have to roll out these exemption certificates and say, oh, that's because that batch of my sales went to Amazon. And here's the certificates that shows you that I sold it to them for resale, and they sold it to consumers, and they collected the tax. Anything other than that requires monthly sales tax returns are the norm in the United States. So even tiny little businesses end up having to file a monthly sales tax return, and it's because it's based upon your annual tax collections. So if annual sales tax collections are $1,000 throughout in any state in the United States, you have to file every month. Even if your sales are, quarterly, you make them every quarter. It's very complicated. It not having a process in place. You have to have a process in place, and there's two ways of doing it. You can hire people, and you can have them, who their job is nothing but to keep track of all these different rules and regulations, or you outsource it to somebody who has built an automation tool.
Yeah, I think personally I'll vote for the outsourcing. It seems a lot easier than hiring people, and I'm going to be honest. No matter how good people are, they have holidays, they go sick, and sometimes they're just forgetful, and things just don't get done on time. And the software is hopefully always going to have that reminder for me and ensure things get done. But just before we go, and I really appreciate time today, Scott. What's the one thing that you're looking forward to in 2024, or perhaps not looking forward to, that you can see coming down the horizon that businesses need to be thinking about?
The one of the things that's concerning us is the states they lost a lot of people during the pandemic. A lot of people retired. They never came back, and they couldn't. The states they don't pay particularly well, so it's hard for them to compete. But they're slowly changing that paradigm. So they've convinced the legislature to pay more money, and the legislatures, the politicians are giving them the resources to go back in the auditing business. And so there's a presumption out there among the governments that they've fallen behind in auditing.
Mm-hmm.
Because they lost auditors, they lost senior. When you retire, you lose a very senior auditor, and senior auditors they're just money makers. I mean, they're good at what they do.
Inspections are the one thing that scare everyone, no matter how diligent you are, if they find something wrong.
Yeah, and everybody's afraid to be an auditor. I mean, I know what the heck I'm doing. I'm still a bit afraid of being an auditor. So we're concerned about that simply because that imposes a lot of burden on our customers, and they're going to come to us to help them manage that audit compliance. And we're more than capable of doing it, and we've got the resources and the data to do it, because it's just a data decision. I don't expect a lot of tax policy changes in the United States, at least at the state level, in 2024. State budgets are really quite good today. I don't think we're going to have a recession, so that means that we're going to get back to more normal tax and spend decisions. Okay, our sales tax rates, we're going to increase 3% this year. I know it was 12% last year, but that was abnormal. We're going to go back to the 3%, which means I can't spend more than 3%. So there are going to be more conversations inside governments about how do we keep the status quo, and less about, okay, I'm swimming in money, what do I do with it? And when I worked for politicians for a long time, and every one of them said they would much rather have too little money than too much money, because they fight when there's too little money. Then it's a partisan issue. My side wants to do this and your side wants to do that. When there's too much money, everybody wants to do something.
Understand. Well, it's a good problem to have too much money at the moment, but I doubt it'll last for very long once it gets spent. And as you say, we get back to more normal tax increases each year. But Scott, I really want to thank you for your time and your expert insights today. And hopefully we'll be talking again in the future. So thank you so much.
Thank you, Chris. It was my pleasure.